If you were to get a gun and put it to my head and ask me, do I think the stock market low is already in? I've got to say yes. I believe there is a 50% chance, like the odds are greater than 50%, that the market holds from here and only goes higher. Last week we hit the low at 4,800 on the S&P. I think that we don't go under that level. We will not go under that level and will only go higher from here. Now, let me make my case. Obviously, I'm playing with fire right now, okay? That's why I'm saying the odds are greater than 50%. Anything can happen, you know? We've seen what can happen like with Donald Trump and the tariffs. It moves the market. So it can obviously escalate from here. But I believe the odds are greater than 50% that the market moves higher because I think it has been quite overblown. I believe what has happened is a lot of novice investors were frightened by all of this news because they didn't understand it, right? They really didn't understand it and they sold their positions. They sold their positions, which is selling pressure onto the market, which makes the price go down, right? Combined with the algorithms, the big hedge funds, they maximized, they went short, and I believe they've already closed their shorts and now they're probably going long the markets. I believe they closed their shorts at 4,800, around this level of 4,800. Based on technical analysis, this is just such a key level. Such a key level. I'm going to call this level of 4,800 not the Great Wall of China. I'm going to call it the Great Wall of America. I believe it holds. Now, the reason why I say that is, again, we've said it in many, many videos, but whenever you make a peak, okay, whenever you make a peak, you come down and you correct. So that peak was at 4,800. You correct for multiple years and then you break out. At that breakout point, what happens? Everybody in the history of the asset, everybody in the history of the S&P 500 is now in a profit and the market shoots. And that's exactly what happened. The market shot up. Then all of the uncertainty started to come out with Donald Trump and the tariffs. All the novice traders, they started to freak out because they didn't know what it was. Now, think about this for a second. There are so many novice traders in the market these days. Why? Because with technology, it's so easy to participate in the market. It's not like 20 years ago where you had to call up your broker. You know, you had to call up your broker and there was a lot of barriers to entry. Now everybody has these apps on their phones. So, you know, and you can invest, you know, you can get all these partial shares and all of this. So the barrier to entry is like non-existent right now, which means as a percentage, is there more or less novice investors participating in the market right now? There's way more. There is way more. So this is actually a benefit for these hedge fund guys. They can use this to their advantage. So it makes sense. It makes sense that the market is more volatile these days. It moves quicker. Information spreads faster. We've got social media. We have Twitter. Okay. Everything spreads way quicker. The emotions are heightened. And then you got the algorithmic traders. They're unbelievably quick, backed by AI. So I think that's exactly what happens. The novice investors, they started to freak out. They started to panic. They sold off. They got rid of what they had. Right. And the market started to come down. The hedge funds, they went short as well, put extra selling pressure. But we came down to the level of 4,800, back to the previous all-time high, which was, we made that all the way back in January of 2022. That means that was like almost 3.5 years until we were back at that level. That level was created 3.5 years ago. So if we take a step back and think, over the last 3.5 years, if the price was the same, did the companies make more money or less money? Pretty much every company in the S&P 500 is making a profit. So they're actually accumulating cash. They're then deploying that cash and buying more assets and expanding their business. Over 3.5 years, that's actually quite a long time. Think about that. That's like, it's almost 4 years. That's like, when presidents get reelected, it's like Olympic Games, 4 years. That's been a really long time. So I think The market holds at this level. It's been such a long time. And another reason why is because whenever you break out to an all-time high, there is so many investors which were too scared from this correction, right? They were too scared. They probably sold in at the lows and they watched the market creep up because there was a lot of negative news down here at the lows. There was a lot of negative stuff. There was still so much uncertainty about Russia and Ukraine and all of that, big corrections. No one's talking about that anymore. Everyone's got a memory of the goldfish. They've already forgotten about that. That's what I believe is going to happen with the tariffs. Everybody's going to forget about it. So when they started to see the market run up higher and higher and higher, they were left on the sidelines. Then the market broke out to all-time high and we shot up. And then they're just like, dude, I've learned my lesson. If we ever come back down to these cheap prices, back to where I missed out and where it broke out to all-time high, I'm not missing out this second time around. So there is a subset of these investors that's who they are. They came in and they bought, right? Now it was very damn quick, but they're like, this is getting cheaper and cheaper and cheaper. I'm not missing out this next time. They're starting to learn, like, whatever is happening in the world, what is happening in the environment, doesn't actually always relate to the stock market. It often pays to be a contrarian. So if we just think about the sentiment was extreme fear. Extreme fear. Not as much as, say, COVID. The fear during COVID was way, way worse than right now. But if we think about the COVID, it paid to be a contrarian. Like, even me, I was scared. I was just thinking, this virus is going to spread rapidly and compound very, extremely quick. And it made sense that, why would the market reverse? Why would the market reverse and go straight up? It was straight down because the fear spread across social media very, very quickly, and it went straight up. The fear was larger than today with the tariffs. I think this is it's the same thing. It's a little rubber band. It's the same thing. I think the market snaps back and we go higher from here. Now, another reason why I say this is because the market really is acting like a tennis ball right now. There's been a big bounce. From last week, we bounced hard. We're already back at fair value. We were in the cheap zone. We were in the cheap zone, and it makes sense. We don't stay in the cheap zone for long, right? Remember, the stock market is an extremely hard place. It makes sense that the market's not going to be in the cheap zone for very long. We bounced hard. That means everybody participating in the market right now is starting, you got to follow the money because that's true skin in the game. That means people are thinking that the market is going to go higher over the next few months, and that's the low. If everybody was actually scared and deploying their capital, and that's the skin in the game, the market would sit here at the lows. If the market sat there and it splattered like a rotten egg and the market's not moving, that is showing us that, oh no, that is a warning sign that the worst is yet to come. So if you see, if one of your assets right now is not following the S&P 500, if it did not bounce really, really hard and it's just splattered like a rotten egg, that is a warning sign. That is a warning sign. So any asset in the world right now that's splattered like a rotten egg, I would be more bearish on that asset than bullish. So another thing, if we just look at the S&P 500 again, does it make rational sense that we correct this much based on the tariffs? 21%. 21% in a matter of 2 months. We corrected by 21% in a matter of 2 months. Is that overblown or not? And now we're back at fair value. Right now we are back at fair value. That's pretty unbelievable. Pretty unbelievable. So the actions that I'm going to start taking right now is I'm going to start looking for a few more signs that the market has already processed all of this negativity and we're going to move higher. So what I'm going to be looking for now is I'm going to be looking for a consolidation at this level. A consolidation up here at fair value. If we get that consolidation and breakout, I think it's already done. It's pretty much already done. The worst is behind us. If this happens, right, if we start getting above the fair value again, on eToro, I'm really gonna be thinking like I see in my head right now, there is a big button. There's a big green button. And these are the times as a trader, as an investor, you gotta take the risk and smash that button. You gotta go. So I'm already starting to think about, well, I've already thought. I'm already ready. That's what I should say. I'm already ready for the plays that I'm gonna make. I actually want to increase the risk. I want to increase the leverage right now. Now, if you're new to this stuff, that does not mean you should do that too. I've been in the game for more than a decade. I know what I'm doing. But right now, it feels like one of those opportunities where if you go hard and you can see it, you will get really, really rewarded. So right now, I'm actually honestly getting so super excited because it seems like this time, this year, could again be another great year for the stock market. Like right now, we're down 8%. We are down 8% on eToro. This is going to turn into a green year. I believe it's going to turn into a green year. It doesn't make sense right now and it feels weird, but this stuff, I felt this before a million times with the stock market. I felt it a million times. You know, during COVID, it was not easy to go long. It really was not easy to go long. But then what do we have? We had the correction. We came up. I wasn't a buyer here. I was scared, right? I was scared to be a buyer here. I'll be honest. I was scared to be a buyer here. But once I started to see the consolidation at fair value and then you shot up, and then you started consolidated all-time high, and then you shot up again. Like, these were the signs. You come in here, right? You come in here, and then when you shoot out, you got to be maximum conviction at the all-time high. You have to be, right? So any consolidations near fair value and then breaking out to the highs, that's a great thing. Now, one last note. The reason why it pays to be a contrarian and go against what everyone else is feeling. So if let's say right now, everybody was feeling fear. And if we hit peak fear, that means if we hit peak fear, everyone who wanted to sell has already sold. So then the selling pressure is gone. So it's about supply versus demand. If there's no more sales to hit the market, everybody who was scared has already sold. Even if they become more scared from here, they got nothing to sell. They've already sold. Then what happens with these guys, when you hit peak fear and the market starts to go up, then again, they miss out. They miss out and they end up, and the market starts going up again and again and again. And they start having a bias towards the fear side because they don't have any money in, right? They start looking for all the negative aspects of the market. But eventually the market just keeps going higher and higher and higher and higher and higher. They're stuck on the sidelines. And then eventually when the market goes up way too much, then those nervous investors, then they finally grow some balls and buy. But then it's already too late and then you get some sort of pullback. The pullback then scares them and then they sell again. And a cycle just repeats again and again and again. Sadly, a very significant portion of the novice investors, if they're trying to be active with their investments, they will be a loser. That's the truth. They will be a loser. That's why it's really hard to beat the dollar cost averaging strategy and just being a buyer and a holder. That's it. Just constantly buy, just constantly hold. Be very, very careful with hitting the sell button. The stock market is actually very dangerous. Look, with just couple clicks of a button, you can get rid of your assets. It's very dangerous. You got to be really, really careful. There's a lot of consequences to clicking that button. All right, guys, that's everything for this video. Obviously, I'm playing with fire right now. Just be careful. Be careful about what I'm saying. I'm saying the odds are greater than 50%. That doesn't mean it's 100% odds, okay? Right now, we're playing with fire. Anything can happen. But right now, I'm feeling a lot more bullish than I am bearish. That's the truth. All right, guys. Hopefully you learned something. I'll see you in the next one. Thank you very much.